Good afternoon, everyone. Welcome to NITYA Indirect Tax Roundup, December 2022 edition. Today I'm joined by my colleague Srishti, and we'll be covering last month's changes, key rulings, etc. So there are multiple changes which have taken place during a month span. There are some news indicating what are likely to happen in near future. There was a landmark ruling of Punjab and Haryana High Court in case of Genpact. We'll be discussing that in detail, and in particular, the concept of intermediary, recent rulings, and the synopsis of the whole session. And we'll wrap up the session with the Q&A round, where you can ask your questions live. And we request you to restrict your questions to the contents of today's session only. Starting with recent changes, so the government has issued guidelines for verification of transitional credit. As most of you will be aware that in case of Philco trade, the Supreme Court opened Tran 1, Tran 2 window for a couple of months, namely October and November 2022. So the board has clarified that the jurisdictional officer should complete the verification by February 2023. So this is exactly in the line with the Supreme Court's direction that within 3 months' time, the verification should be completed. Another very important aspect and a bit concerning aspect as to how the verification will be undertaken. So board has also clarified that if in a taxpayer's claim, there is a element of both CGST and SGST, so respective jurisdictional officers will only verify such claims. So central tax officer should verify claim of CGST only, and whatever claims are relating to SGST or UTGST, he should forward that claim to respective officer for verification. So why I'm highlighting this point is that again in Tran 1 verification, because most of the taxpayers will have both CGST and SGST claims, so there will be bound to be multiple verification both by state and central GST authorities. Moving ahead, two major changes which happened for inverted duty structure refund in July. One was that particular set of products like edible oil, etc., were removed from the list. And secondly, in line with the direction of Supreme Court in case of VKC footwear, the government tweaked the formula as to how the formula should be construed or how the formula should be made. And pursuant to that, the government has amended the inverted duty tax duty structure refund formula. So a lot of questions which arose as to whether such change will be prospective or retrospective. So before coming to what are views on this, so firstly we'll tell what the government has clarified. So the government has said that the amended formula will apply only for refund applications filed on or after 5th July 2022, namely the date of the change. Similarly, the restriction to goods like edible oil, etc., will only apply for refund applications filed on or after 18 July 2022. So we'll pause here for a moment, and effectively in this circular, the government has put the cutoff date as date of filing of refund application with total disregard to the period to which this refund is sought to be claimed. So say for example, on one hand, the circular says that this change is prospective, whereas even as per the government's clarification only, they have made it retrospective, because like the first bullet which says that amended formula will apply to refund applications filed on or after 5th July 2022. So if period of limitation, and I'm excluding the COVID extension, etc., if normal period of limitation is 2 years, so a taxpayer can very well file the refund as per old formula from July 2020 to July 2022 as per this circular itself, which in effect gives a retrospective application. And similarly, the converse is also true for products where this restriction has been brought in, that even though the taxpayer made the procurements like a edible oil manufacturer, etc., prior to July 2022, due to which accumulation happened, but for some reason he did not file the refund claim, even though the limitation had not passed, so he will be ousted from this. So, in our view, this circular is likely to undergo a lot of litigation. But in our view, the right way of construing this date is the date on which this credit has been accumulated. So, all ITC which got accumulated because of VKC footwear issue or for products like edible oil, etc., all credits which got accumulated till July 2022 because of procurement, sale of products at lesser price, etc., will be eligible. Thirdly, this anti-profiteering, all the cases stand transferred to Competition Commission from December 2022. Amongst other changes, one of very benevolent or favorable change which government has done is that all export benefits, which we'll discuss the listed ones, uh, even when the foreign exchange, even when the currency is INR, currency of realization, even then the export benefits will be available and these will be counted for fulfillment of export obligations. Namely, if you import products for further re-exports, for exports to Iran, for status holders export performance, for advance authorization, DFIA, EPCG scheme, etc. So your export obligation will be counted as met, even if export proceeds are realized in INR. Now, the legal methodology changes, which are due for implementation for long, and every time the government has been extending it. So these were supposed to be implemented from December 2022, and now the government has granted one more extension, namely January 2023. Coming to the news, the Supreme Court has constituted special tax bench, which is a very favorable move, so that the present pendency of cases before Supreme Court will be settled. So many issues which are pending before Supreme Court, we will see getting finality in near future. This is changes as soon as yesterday only, that there was a lot of representation from sectors like steel, pharmaceuticals, chemicals, etc., that road tax benefit should be available, which government has extended. Government is planning to discontinue SAIS, and apart from that, even 2020-21, there is no clarity what will happen. Next GST Council meeting is on December 17. Issues likely to be taken up are online gaming, GST appellate tribunal, decriminalization of offences, etc. These are the main topics which are likely to be considered. But what news reports are coming is that in many of these issues, there is no consensus as of now. So let's see what actually happens. This again is a news, and we need to see whether it will see the light of the day or not. So the government is targeting that GST appellate tribunal should be constituted by December 23. In my view, it's almost impossible because, firstly, in the line of R. Gandhi Supreme Court ruling, government needs to correct the constitution of GST 80, which will presuppose amendment of all CGST, SGST, and UTGST laws. Secondly, they need to create infrastructure, appoint judges, have a filing or procedural mechanism, etc. But let's see if it happens. Another very important and I'll say favorable move which is likely to come is that there is a news that government will introduce an amnesty scheme for exporters. So all the exporters who have defaults in advance authorization, EPCG scheme, etc. So many details are not there, but the government is planning to bring an amnesty scheme in which they can just pay the tax, etc., and be done away with it, and all interest penalties, etc., will stand closed. Now, moving ahead to the concept of intermediary. So we conducted few polls that because this intermediary concept, apart from a very complex definition, etc., it has been surrounded by so many board circulars, so many rulings, advanced rulings, etc. So we conducted a poll amongst participants that do they understand the concept of intermediary or not. So only 45% assuming clearly understand the concept, but 55% they are either fully not clear or partly unclear. Similarly, the Genpact ruling, which was more relating to the concept of BPOs. So the second poll question was, do BPOs qualify as intermediary? So again, to my surprise, even after this ruling, only 32% participants feel that BPOs still qualify as intermediary. So coming to the concept of intermediary, so the definition covers any broker, agent, etc. Very important aspect is who arranges or facilitates supply of goods or services. So in a very layman language, it's like a commission agent who connects two people to buy, sell goods amongst each other between two persons. So he's an intermediary. Law clearly excludes a person who supplies goods or services on his own account. So this was the definition, and then a lot of disputes started coming in whether BPOs qualify as intermediary, if a subcontracting happens that qualifies intermediary or not. And the board issued a circular in September 2021. And why it's necessary to determine? Because a service qualifies as export of service only if place of supply of service is outside India, whereas place of supply of intermediary is location of supply. So if a person, even if he is supplying services to an overseas customer, he qualifies as intermediary, then place of supply will be within India, which means that it will not qualify as export of service. So now coming to the Genpact ruling. So in case of Genpact, there were three parties, namely Genpact India, Genpact International, and Genpact International's customers. So three parties clearly existed in that case. So Genpact India had a master services subcontracting agreement with Genpact International, in which it was supposed to provide BPO services to Genpact International's customers. So as we discussed that intermediate definition presupposes existence of two supplies, which is main and ancillary, which were absent in that case. Very importantly, the definition starts by using that the person should be in the nature of agent, broker, or similar person. So similar person will also take color from agent or broker only, who connects these people. So this element was missing in case of Genpact India case. Facilitation of main supply. There was an exclusion of who do not supply goods on its own account. And as per the circular, subcontracting arrangement was clearly excluded. So the High Court held that Genpact India do not qualify as an intermediary, and its services qualify as export of services. So in our view, this is a very important ruling and a correct ruling also, because firstly, Genpact India was not in the nature of agent, broker, etc. It was merely providing uh, brokerage services. It was not facilitating main supply, etc. In fact, it was supplying, it was acting on a principal to principal basis. It was merely a case where activities were subcontracted by Genpact International to Genpact India, which is clearly permitted by September 21 circular. So in our view, because the key elements of definition of intermediary were missing in that case, therefore the court rightly held that Genpact India will not qualify as intermediary. So this ruling has come a big relief to the BPO industry. Apart from BPO, also it has multiple other implications in the sense that it has given a stamp to a subcontracting activity, even if not of BPO, that subcontracting activity will not qualify as intermediary. Second, a few unique facts which may be relevant for many of you will be that the court also relied that for the very same type of agreements, transactions, etc., the authorities were treating Genpact India were not treating Genpact India as intermediary and treating their services as export of service for granting service tax refunds. So to that extent, the court also applied the principle of estoppel and no change in facts also. So in general, the key identification factors which are relevant are that apart from intermediary, there should be two more parties. Intermediary is generally authorized to represent and form legal relations on behalf of the principal. Principal can be both buyer or seller. He interacts with third party, but that's not a conclusive test. And intermediary service is ancillary to provision of main service. So yes, this ruling comes as a very welcome relief, but still there are many other type of disputes relating to intermediary which are yet to be settled. Now coming to the recent rulings, so Srishti will take it forward from here.
Thank you, Puneet. So going ahead with the recent rulings of the month of November. So firstly, as we're aware that in the case of Union of India versus Philco Trade Center, earlier the Supreme Court had disposed a large number of batch of petitions by a common order, thereby allowing opening of the common portal. So now the case of Philco Trade has been restored, and this particular restoration has been done on the limited question of validity of transitional credit of stocks which were acquired prior to 30th June 2016. Moving on, so recently the Jharkhand High Court in the case of Usha Martin Limited, essentially in the particular case, the petitioner had transitioned Senvat credit through Form Tran 1, and later during verification of Tran 1, the revenue passed order for demand and recovery of such credit. The provisions on which the revenue had relied was Section 140 read with Section 73 of the CGST Act. Now, in this particular petition, the petitioner was contending that as uh, uh, the definition of input tax credit does not envisage SENVAT credit in itself, therefore, recovery of transitional credit cannot be done under CGST Act. The court has accepted this argument, and they have noted that ITC under CGST Act does not cover SENVAT credit. And as Section 73 only talks about demands and recovery for ITC, therefore, recovery of transitional credit under Section 73 is not permissible. However, the court has also noted that proceedings can be initiated for pre-GST laws by reading Section 174 of the CGST Act. Secondly, the ruling in the case of Sanatan Textiles Private Limited versus Union of India. So in this particular case, the question was in relation to notification number 79 of 2017, which exempts import of capital goods under EPCG scheme from payment of IGST. Now, it is important to note that this exemption from IGST was made applicable from October 13, 2017. So essentially, this exemption from additional duties of customs was available under the pre-GST laws and then available under GST from October 13. Now, the petitioners contended that the intention of the legislature has always been to exempt import of capital goods, and therefore this notification should be read in a manner that even for the short period when this exemption was not available, this notification should be given effect as retrospective. For this reason, several records, including minutes of the GST Council meeting, were placed before the court. And court has analyzed minutes of the 22nd GST Council meeting. And from a reading of those minutes, the court has noted the SESTAT has noted that essentially uh, the the court has allowed refund of IGST paid during this period. For this, the court essentially during reading of the minutes, the court noted that from reading it is coming that the intent of the legislature was indeed to grant exemption from IGST to import of capital goods. However, in our view, if we were to look at the minutes of GST Council meeting, the ministers are actually comprehending whether or not this exemption should be extended under GST, which essentially means that for the short period when this notification was not there, it was very well thought of and not merely on account of inadvertence. Therefore, such exemption should not be allowed to be given retrospective effect. Next, the ruling of Jagdalpur Motors. So this particular ruling relates to filing of Tran 1 during the recent reopening of GST portal. So the petitioner committed an error in filing Tran 1 during revision of Tran 1 in the reopened GST portal, and by way of this petition, they were seeking rectification of the said form. The High Court has given relief to the petitioner. The High Court, so in this particular case, the revenue was contending that reopening of GST portal was a one-time measure, and this was only on account of Supreme Court's ruling. So now the entire procedure present under the Act, which also allowed one-time revision under Rule 120A, it cannot be extended. However, the High Court has held that one circular cannot curtail the benefit which the statute provides. So, insofar as Rule 120A is giving a window to the taxpayers to revise the Tran 1, such benefit must be allowed to the taxpayers, and accordingly, they have allowed rectification of the form. In our view, this ruling is also correct. Moving on, the case of RSB Transmissions India Limited, another Jharkhand High Court ruling. So in this particular case, the petitioner had deposited amount of tax in their electronic cash ledger within the due date of payment of tax. However, their GSTR 3B was filed belatedly, and therefore revenue was levying interest on the delayed payment of tax. The petitioner's contention was that insofar as amount was already deposited within ECL, therefore no interest should be levied. However, so the court has agreed, the court has held that depositing any amount in ECL is not the same as deposition of payment of tax, and it is only when the taxpayers file GSTR 3B that payment of tax would be assumed. In our view, this ruling is also correct, and there was another ruling recently which also upheld this position. Next is the case of Bambino Pasta Food Industries, and this is a double AR ruling. So in this particular case, the company Bambino Pasta Food Industries, they had distributed oxygen cylinders during COVID period as part of their CSR activity, and now they sought to find out whether they are eligible to claim input tax credit of this expenditure. The AAR has rightly allowed this input tax credit on this expenditure, noting that this expenditure is very well made in furtherance of the business, and ITC should be admissible. In our view, this ruling is correct. Now, moving on, as we're aware that the issue around taxability of canteen services provided to employees and for a part recovery is an issue which keeps coming up. So recently, two rulings came up on this issue again. First is Federal Mogul, and the other one is Tube Investments of India Limited. In both the cases, the applicant was providing canteen services to its employees against a part recovery. Now, insofar as taxability is concerned, in both the ARs, the authorities have held that the provision of canteen services to employees, it fulfills all the requirements of uh, constituting a supply under GST, and therefore they will be leviable to GST. However, on the point of valuation of this supply, these two rulings differ. So, while in Tube Investment, this question was not posed before the AAR, still they have noted that the nominal amount which is recovered from the employees, that should be taken as the value of the supply. As opposed to that, in Federal Mogul, the AR has specifically noted that valuation of this supply cannot be done under Rule 28, and resort will be had to Rule 30 31 of the CGST rules, which provide for valuation as 110% of the cost of manufacture or acquisition of this particular supply. In our view, this ruling is incorrect to the extent of valuation. The valuation of this supply can very well be done under Rule 28 itself. Lastly, the question of availability of ITC on this expenditure was also posed before the both the AARs. So both the rulings have given contrary views itself. So in the case of Federal Mogul, the authority held that since they've read the GST rate notification, and they stated that in terms of the GST rate notification, 5% GST is leviable and no ITC is available. As opposed to that, in Tube Investment of India Limited, the AR has observed they have disallowed ITC on canteen services. For this, they relied. So essentially, the in Tube Investment Authority has faltered in the reading of second proviso to 17.5b. They held that the second proviso is only applicable to clause 3 of 17.5b, and therefore, even if any legislature is requiring applicants to undertake an expenditure, still that will not qualify for ITC. Now, in our view, ITC of this expenditure is very well available.
So just to summarize, and there's a lot of confusion happening with each passing day on this canteen. So in our view, one, if a company makes part recovery for canteen from its employees, it will qualify as a supply. The value should be the actual recovery amount, not open market value or cost plus 10%. Thirdly, in our view, ITC should be available. In Tube Investment of India, they totally disregarded July 2022 circular, where board itself clarified that ITC on canteen is available. Second, in our view, yes, GST rate of 5% is applicable, which says that ITC needs to be reversed. But in our view, because most of the expense will be borne by the company and part is recovered, so it should qualify as a common service. And to that extent, the reversal needs to take place on a proportionate basis, not full. Yeah. Okay. Now, just to wrap up today's session, so very important ruling of High Court that transitional credit cannot be recovered under Section 73, even if SENVAT credit or pre-GST credits were incorrect, and because the time limit of undertaking recovery proceedings under pre-GST laws has already expired, so that credit becomes final. SCIS is unlikely to be available to service exporters in future. Legal metrology changes stand deferred to January 2023. Some relief on issues around surrounding intermediaries. We need to look forward to amnesty scheme for exporters. And yes, this canteen recovery continues to be a debated and disputed topic. Lastly, yes, this Philco trade matter stands open for all the stocks which were more than 1 year old. So thank you for joining in large numbers. And with this, we come to end of today's session. Yeah. Thank you.